Hi, this is Mary Ann Ernholtz, your local real estate agent. And today I'm going to interview a local insurance agent. And we're going to talk about what you should look for in your insurance policy when you are going into escrow and your new home. This is Mike Carbone. Hi, Mike.
Hi, Marianne.
Mike has been an agent for a lot of people that I know, and he's very honest. I got a quote from him, and he actually told me to stay with the policy that I have. And I appreciate honesty and someone that doesn't try to push things on you that you don't need. So, Mike, tell us what a buyer should be looking for in a policy.
Well, there are a few things. Most homeowners, new homeowners, come to me asking and not really knowing how their home policy should work for them and how it should cover them. A few things on the policy itself: you don't have coverage for the dwelling, so the structure of the home. You don't have coverage for your personal property, so everything that makes that house your home, if you would, all the things you're going to move in after you close. Beyond that, there will be some additional coverages that most homeowners policies will come standard with, and really deciphering how much coverage you should have in certain areas and, well, how much do I insure my house for? These are usually the biggest questions buyers have because they just don't know.
Should they insure it for the price that they pay for the house?
No, and that to me, a lot of clients come to me and say, well, I'm buying it for X, let's insure it for X. Well, the fact of the matter is any insurance policy on a home, it should be insuring the home for the replacement cost. Because if you take that home and move it to a different part of the country, it can sell for a completely different price. So the purchase price should not drive the amount of coverage you have. It should really be the replacement cost. And when you're working with an agent, what they should do is really question you about the makeup of the home, the square footage, the floors, the makeup of the kitchen, the bathrooms, how many bathrooms, how many bedrooms, garage, and really the ins and outs of the home and what it would cost to replace that home are really what should dictate the amount of coverage you have.
What other coverages should a policy have?
That's a great question. And really, once you figure out the amount your dwelling should be insured for, there's going to be other coverages that will automatically set to a percentage of that. So think of the dwelling, again, the structure of the home, work up the replacement cost. If it comes back at, say, $250,000, automatically off of that, there's going to be what's called detached structures, other structures coverage. Depending on the insurance company you're working with, the verbiage could be slightly different. But what that coverage will do for you is say, all right, if you have a detached shed, any garage that's not attached to your home, really any structure on your property that's not attached to your home, that's where you get coverage for those items, is through that detached structures, other structures coverage. And most companies will give you around 10% of what you're insuring the home for. So that's just kind of a standard. Beyond that, you have personal property coverage, which again is all of that contents that makes the house your home. Think of it, flip that home upside down, all the stuff that falls, that's your personal property. Here, you'll typically see insurance companies provide anywhere from 50 to 75% of what you're insuring the home for, so of that dwelling amount number, for personal property. Few notes on the personal property coverage. You want to make sure you have replacement cost on your personal property. Meaning, if you have a 10-year-old couch, they're not going to take off for every year you've owned it if something happens to that couch. They're going to say, what does it cost to get you the same like, kind, and quality couch in today's dollars, and not depreciate the value of that good. So that's very important. The other note on personal property is when you're speaking with your agent, and if you have certain items such as jewelry, goldware, silverware, any type of art that is hard to value, you want to make sure those items are correctly insured, because no insurance policy will cover a $10,000 ring or artwork piece without it being listed separately. So again, talk to your agent on that, make sure it's being covered properly for you.
Do you need a formal appraisal?
Yeah, so again, depending on the company, there are ways to put what's called a blanket property limit on certain items. You typically pay more for that because it's not being scheduled separately. I always recommend getting that formal appraisal, especially if it's an item you bought, years ago. You just want to know what it's worth in today's dollars to make sure it's properly valued on the policy. And if something happens, you can replace it. Some other areas of coverage that you'll typically see on your insurance policy, you don't have what's called loss of use coverage. Most people have a general sense just by the name loss of use, but what this coverage would do for you, it says in the event of a covered loss, if you cannot stay in your home while the work's being done to repair, the insurance policy pays for you to live life somewhat normally. Whether that's, a few weeks in a hotel room, if it's a few months in a rented apartment, if it's paying the additional costs that you would have for eating on a daily basis because you're not at home, if it's driving extra mileage to and from work, it covers all these costs for you. So I had lived through a claim where I couldn't stay in my home. For a week and a half, I had to go to a hotel. Water damage, asbestos floors just don't mix when that has to come out. So I spent a week and a half in a hotel with myself, my wife, my 3 kids, and my 115-pound shepherd. And my biggest concern was, oh boy, 1 room, 2 beds, 5 people, 1 big dog. How in the world will this work? Well, my insurance policy actually paid for us to get a 2-bedroom suite with a kitchenette, found one that was close to my home, paid well above what the going rate was because it was an emergency, just to get us someplace that would be life as normal. So that's really what that coverage is meant to do. Okay.
Know someone that's had to use that for an extensive time, and
yeah.
I'm so glad that he had that.
Yeah, it's a very important coverage, and depending on the insurance carrier you're working with, you'll either see a dollar limit amount, or you might see a set amount of time with a dollar limit, or certain companies will give you, like 1 full year worth of coverage or 2 full years worth of coverage. It really depends on the makeup of the policy. So, look at that, but usually it's a decent amount of coverage they're giving you on that. Okay. Few other things I just wanted to bring up too from a coverage standpoint. Obviously homeowners policies have liability coverage. That's there. If somebody's on your property, they get hurt, they turn around and sue you. I always say, find a limit that you're comfortable with, and knowing, well, if I got sued for X, I have this much coverage through my homeowner's policy, and I'm comfortable with that. Think of your assets and income is what I always say. Beyond that, few things that not all homeowners policies come with, but to me are important coverages, things such as backup of sewage drains and sump pumps. If you have a sump pump in your home, you better make sure you have that coverage. Even if you don't, think of a sewer line or a drain line backing up. I have had clients where, the town was doing something, drain line, sewer line backed up into the home, caused extensive damage, water damage, and they didn't have, proper coverages. They came to me, we discussed the coverages, and they told me of what happened, and we got them the proper coverages. So it's important to have that coverage. Again, not all policies will give it to you. It's something you want to ask about. In addition to that, if you have an older home or even a relatively newer home, building ordinance or law coverage. Most people have no idea what that coverage is. Marianne, any idea?
Say it again. What was it?
Building ordinance or law coverage.
No. I should.
Okay. So think of it this way. When your home is built, it's built a certain way to a certain building code that exists at the time.
Oh.
Right? Over time, building codes change. What's required in a home changes. The way a home has to be built per the town standards change. So if I had a loss on my home, which was built in 1964, and I had to go to my town to get building permits to rebuild, and they said, all right, Mike, well, guess what? You need to rebuild to the current building code. And let's just say it's going to cost an extra $12,000 to bring my home up to the code with the rebuilding. Those costs are not covered under any insurance policy without building ordinance or law coverage. Reason why? The insurance policy is meant to put you back in the same spot, not necessarily make the updates. So again, a lot of policies or most policies come with 10% of what you're insuring the home for standard on the policy, but there are policies out there where you will not have this coverage. So to me, it's very important to have that coverage, especially with an older home, because if something happens and the home has to be brought up to code, and you're in a situation where you're paying your deductible, you're not in your home, and the insurance is covering things, last thing you want to do is pay another X amount of dollars out of pocket to bring the home up to code so that you can get back to life as normal. You want to make sure the insurance is doing its job for you and covering you on that.
What about umbrella policies?
So an umbrella policy, an excess liability policy, I recommend those to anyone that has assets to protect, whether it's savings, retirement, hard assets, property, if you would, or higher incomes. Because what those will do is provide that quote unquote umbrella above you for liability purposes. So your umbrella policy typically starts at $1 million worth of coverage and goes up. And what it does is it covers both your auto and your homeowner's liability. So if something were to happen and say on your home, you had $300,000 worth of liability, somebody comes on your property, gets hurt, sues you for $1 million. Well, the home's going to cover 300,000 of that. And then the balance of 700,000 would be covered from the umbrella policy. So again, I say, think of your comfort level, think of your assets, your income, and what you have to protect to determine if it's a proper fit for you.
So when I asked you for a quote, you told me that I was better off where I was because we have the cars and the house on the same policy. Is it always better to have all your policies in one place to get a discount?
So I would say yes. And it might not always be on the same policy depending on the carrier, but having things packaged together, you do get multiple line discounts. 9 out of 10 times it will make sense to keep all your coverages with the same carrier because of those discounts. But again, it's not always the case. To me, what you want to look at and really decipher is how can you get the most out of your policy without paying the most, if you would. A few things to be on the lookout for as far as discounts, ways to reduce your homeowner's premium. You want to really find out the age of a few items. The roof, your HVAC system, your electrical system, and then any plumbing updates. Most carriers are going to give you a discount if those are all within a certain time frame. Usually it's 15 years, 20 years, depending on the carrier. You will get a discount. The newer the roof, you typically get a better price. So I have a lot of clients that come to me and I ask the question, all right, you're buying the home, how old's the roof? How old are all of these different items? And they're not 100% certain. So while doing your due diligence, try to find out how old those are, because if you can provide those to the insurance agent you're working with and say, hey, everything's been updated within the last 10 years, chances are you're going to pay less for your policy. In this day and age, we all want to pay less and still have the proper coverage. So with the monitored alarm systems, again, it can save you more than it costs sometimes, depending on the system, depending on the company you use, and it gives you that extra peace of mind too. So when finalizing your thoughts on a security system, keep that in mind that it could save you upwards of 10% on your home policy.
So the next time I lament that we've got that bill again to pay, I'll bet we're saving a lot of money on our.
Exactly.
What about deductibles, Mike? How do you know how much is too much and how much is not enough?
When it comes to the deductible, I always say there's a fine line of figuring out value. To me, at the end of the day, everything with an insurance policy is about value. What are you getting for what you're paying? So the old industry standard used to be that $500 deductible on your home. This day and age, a lot of clients I'm working with today to take out new policies, it's $1,000 deductible. My own policy, I did increase from $500 to $1,000 a few years back. What you want to make sure of, though, is one, any deductible that you're electing to have on your policy is an amount that you're comfortable with should something happen. Because the last thing you want to do is, have to come up with $1,000 that you don't have at that time. And secondly, you want to make sure if you're taking on a larger deductible that it actually makes sense. So, and by that, I mean, if you're saving $30 a year to go from a $500 deductible to a $1,000 deductible. Does that mathematically make sense? That's an extra $500 over 10 years. You're not even making that difference up. So what you want to make sure of is the value is there. The average homeowner has a claim every 7 to 10 years. So again, if you're saving $300, again, using that $30 over 10 years, you're not even making up that difference to go up to the $1,000 deductible. So I would say keep the 500. Have your agent run it both ways for you and really determine what's right for you. Most people will save $100+ to go from 500 to 1,000, but not everyone.
I think it's good to talk about this and have people look at this video so they can give it a lot of thought before they go into an office or talk to their agent over the phone and just go yes, no, and not have time to think about things. So
I know.
It's sometimes these are big financial decisions really, and they could affect you dramatically. So I think it's good to think about everything before you go and just sign on the dotted line for a policy.
I agree 100%. I work with clients all the time that are 2 to 3 years out from closing on the home they just purchased. And I say, all right, well, when you put this policy in place, how did you determine the amount of coverage? And the answer 9 out of 10 times is I have no idea. I was in a hurry. I needed a policy. I called the 800 number. I called the XYZ agent, and this is what they recommended. Didn't really go through the coverage with me. I just needed to get this checked off my list of things to do because I was doing 1,000 different things. Mm-hmm. To me, it's important. Take the extra 10 minutes to really go through the policy, make sure you have the proper coverages, because it's a huge financial commitment buying a home. And the last thing you want is to not have a policy that's helping you keep up with that commitment and keeping you safe should something happen.
Mm-hmm. Financially safe.
Yes, exactly.
Thank you so much for all the information. And, it's nice that people can review this. They can listen to it a couple of times and get all their ducks in a row before they go in or talk to an agent about the policy that they're going to need. And I appreciate your honesty. And I know that you work really hard to take care of people. So how would people get a hold of you if they want an agent like you that's going to look out for their best interest?
Great question, Marianne. Best bet to reach me is going to be giving me a call directly. 585-953-7827 is my direct line. I'm available. I always tell my clients any day, anytime, I'm here to work for you and work with you. So feel free to give me a call if I can help in any way. If email is better, you can always email me. It's michael.carbone, C-A-R-B as in boy, O-N-E, @metlife.com.
Well, it's nice to know that you work the same hours as real estate agents.
Oh, yes.
4/7. So thank you so much. And I appreciate you talking with me today. And I know that we got some good information out there for folks.
Well, thank you for having me. Pleasure.
Thanks.